Okay, good morning, and we're looking out the window. The window seems a little bit dirty, or maybe it's foggy. I'm not really sure, but there are some clouds, but the sun is coming up. Good morning. I'm Kenny Polcari here with my Dunkin' Donuts coffee once again to wrap up the week. It is Friday, March 11th, 2022. And what is it that you need to know? Because once again, there's so much going on with the headlines clearly driving the action. So Wednesday's rally turned into a dead cat bounce on Thursday. This morning, Vlad is teasing markets, telling us that those diplomatic efforts just might be working, sending European markets higher and sending U.S. futures shooting higher after they've been trading around the flat line all night. CPI is hot and expected to get hotter in the months ahead, all while Joey and Janet are blaming Vlad for yesterday's report, which is absolutely comical, and we'll talk about that. And what are we having for dinner tonight? We're having the filet of sole. So listen, the rip-your-face-off rally on Wednesday turned into a dead cat bounce yesterday, right? At 8:30 yesterday morning, we got the monthly consumer price index report, and it was not pretty. Inflation now officially at a 40-year high and going higher, reaching 7.9% year over year. Just wait until next month. This was a level we last saw in January 1982 when we were in a recession and the Fed, led by Paul Volcker, was trying to tame inflation, which had run to 13.9% at the end of the Carter administration in January 1980. 1 year later, inflation was running at 11.8%, and then in January 1982, inflation was reported at 8.4%. Now, just so you understand, Volcker had no choice but to raise rates aggressively to fight inflation. He pushed the Fed funds rates to 20% in 1980, 21% in 81, and as inflation broke, he let rates fall, and by October of 82, Fed funds were at 9%. 30-year mortgage rates in 1981 were 18.5%. Killing the housing market as financing became unaffordable. So for all of you out there that think this time it's different, that history doesn't repeat itself, you better think again, because we are seeing that in the financial markets and in the geopolitical arena. I mean, this is 2022, and we've got a lunatic on the other side of the world that thinks it's okay to march into a peaceful democratic country and take it as his own. Does this remind anyone of anything? Okay, but I digress. Stocks continue to thrash around. The Dow ending the day yesterday down 112, the S&P down 20, the Nasdaq down 126, the Russell down 5, while the transports gained 180 points because oil took a dive yesterday, so better for the transports. Investors, traders, and algos attempting to reconcile the war in Eastern Europe and the increasingly difficult financial conditions that must be navigated by global central banks and monetary policy that is coming. Remember, it is these very institutions that put us in this position by being reactive versus proactive when the data clearly pointed to brewing price pressures at least 8 months ago. I mean, how long have we been talking about this? How long did Jay and the other central bankers tell us not to worry? They had this one, and while pressures were brewing, they would only be temporary, and that current policy would address it prior to it becoming an issue. So I ask you, how's that working for you, right? At the time, Russia, Ukraine wasn't even on the radar screen. The conversation revolved around COVID and all of its derivatives, lockdowns, and more and more and more support to get us through the pandemic. And all while they expected the price pressures to moderate, right? It was nothing to worry about, but that proved to be a false narrative as the price pressures continued to advance into the end of 2021 and early 2022. Words like temporary and transitory were eliminated from the record, and the idea that inflation would hang around a bit longer became the narrative. Then talk of a more aggressive Fed revealed that even members of the Fed Open Market Committee didn't believe their own arguments. Stocks began the year in a downtrend as analysts had to reanalyze the data and price in bigger and more aggressive rate hikes. Stocks went lower. The administration telling us that the inflation we were seeing was the direct result of the damage inflicted on us by COVID. And then Vlad takes center stage and starts to cause a rumble, lining up tanks and his military along the border of a peaceful nation. And then oil, which was already up significantly since Joey took office, started to rise again. on the prospect of war and another supply disruption to the marketplace, only helping to fuel further inflation. But let's be honest, yesterday's CPI report does not even include the events of late February when he invaded Ukraine on the 24th. Our inflation numbers were already predicted to go higher without Vlad's baloney, and they did. And then Joey yesterday came out to tell us this, and it's really amazing that economists in his administration would allow him to even say this. That today's inflation report is a reminder that Americans' budgets are being stretched by price increases and families are starting to feel the impact of Putin's price hike. Is he kidding? Does he think that we're all that naive? Do he and his advisors really think that they could push that narrative yesterday? I mean, what economist is going to allow him to blame Putin for yesterday's report? Just wait until next month. Then you can put some of the blame on Putin. But yesterday, don't even go there. Has nothing to do with Putin and everything to do with Fed and administration policy, period, the end. We've been talking about this for months. And then last night, he sent Janet Yellen around parading on the news sites, telling us that Americans will likely see another year of uncomfortably high inflation as Russia's invasion of Ukraine muddles her prior forecast, which was that inflation was going to ebb as we moved into the summer. And that is clearly not happening. And while that may be true now, that Vlad and this war is going to create more price pressures, the fact is that the inflation monster was already alive and well. There was no chance that it was going to ebb by summer. So Putin now becomes the convenient scapegoat. Notice, we haven't even mentioned the word COVID in weeks now, and that's because Vlad has redirected the conversation and taken all the pressure off of COVID and now put it squarely on this war in Eastern Europe. By the end of the day yesterday, the 10-year Treasury was yielding 1.98%. Oil was trading at $106 a barrel, which was down, which gave transports the reason to go higher. Gold was kissing $2,000 an ounce, and the Bloomberg Commodity Index ended the day at 125.12, up 12% since the 24th of February. The VIX, the fear index, ended the day a bit lower at 30.25, and cryptos continued to get beaten up. Bitcoin ending the day at 39,000, while Ethereum ended the day at 2,600. This morning they're trading right around there, a little bit lower. Overnight, Asian markets got slammed. Chinese tech companies leading the way lower after they heard Janet's comments, with Japan and Hong Kong suffering the worst, right? Falling 2% and 1.6% respectively. European markets, though, are bucking the trend this morning, even as the Russian army continues to pound cities in western Ukraine as he prepares a renewed push into Kiev. In fact, the news reports that Vlad is importing mercenary fighters from the Middle East to shore up his efforts to take over Ukraine. Diplomatic talks are continuing, even as talks earlier in the week failed, sending stocks lower. The ECB yesterday announced that it's going to end its bond buying stimulus program in the fall if the economic data agrees. I mean, did you see Christine Lagarde's presser yesterday? She looked like a deer in the headlights. At 6:30 a.m., European markets across the board are up between 0.5 and 1 full percentage point. U.S. futures, which had been trading around the flat line this morning, turned decisively higher on the back of the latest diplomatic efforts and news that Vlad said there are some positive developments happening. Right, so think about the oligarchs who are fed up with him as Europe and the U.S. claim their assets and their bank accounts, right? Boats, mansions, bank accounts, ships, whatever. And this only confirms how anxious investors are. At 6:30 a.m., the Dow futures are up 375, S&P's up 55, Nasdaq up 200, and the Russell up 31 points. There is no real economic data today to consider. So once again, it's about the war in Eastern Europe and how the world responds. It is the war between Russia and Ukraine that is fueling the chaos in stocks, in commodities, currencies, bonds, and cryptos. And as the headlines continue to hit the tape, the moves become exaggerated and challenging in either direction. The economic impacts are only beginning to be felt, are also going to continue to cause analysts and strategists to have to redefine valuations, right? So they're going to change the input, the output has to change. Next week is going to bring us the Fed, and while Jay said they were going to raise rates by 25 basis points, Is there a possibility that we could suddenly go 50 basis points based on yesterday's CPI report and the expected surge higher next month and the month after that due to the pressures caused by Vlad? I was and remain in the camp that we need 50 basis points to shock the system, but I don't think we're going to get it. I just don't think so. But it remains fluid, and so much can happen between now and then, right? If there's any diplomatic movement this weekend that changes the narrative, so much can change. But if the talks fail and he pushes deeper and deeper, then expected to get uglier and uglier on both fronts, the war and the global financial conditions. Look, the world has imposed all kinds of sanctions on Russia, on Vlad, on Putin, on the oligarchs. If he continues to fight, then he continues to disrupt the financial markets, and in a way, it's a way for him to fight back on the economic front, even if it's only temporary. Remember, in the long run, geopolitical events do not price stocks. They do, though, create chaos in the short run. The next 4 or 5 months are going to remain skittish and volatile. And if this war drags on for much longer, then the markets will remain skittish for longer, right? That's just the way it is. The S&P ended the day at 4250. We remain in the 4114, 4460 trading range, right? We've been there for a while. We remain there. I continue to believe that any advance is going to most likely be met with significant resistance, unless, of course, there is a change in the narrative. If you're going to put new money in your account, leave it in cash right now, ready to jump when the tone changes if you're nervous. Feel free to tweak any of your other holdings, but if they're core holdings and their story hasn't changed, then sit tight. If you're concerned, because those stocks are going to, if this market turns, all those stocks that have been under pressure that have good stories are going to just soar. Continue to make your shopping list and take advantage of obvious dislocations that are created. And if you're nervous, you can always buy some hedges to soften any blow if you think the market's going to go significantly lower from here, right? Okay, so what are we having for dinner tonight? Well, it's Friday and Lent, so you got to have fish. So I'm giving you the filet of sole. This is one of my favorite dishes. It's also one of my favorite Christmas Eve dishes that you know, right? It's simple to make, and it is a favorite. And for this, you need the filet of sole, eggs, Italian-style breadcrumbs, which I'll give you the recipe, flour, olive oil, and tartar sauce. So you want to beat 6 eggs in a large bowl to make an egg wash, right? Is the first thing you want to do, and just set it aside. You want to put flour on a separate plate and place the breadcrumbs in a separate plate next to that, right? Now you want to make like a production line. You want to do the flour, then the egg wash, and then the breadcrumbs, just so you line it up correctly. Now what you want to do is you want to dredge, you want to rinse and pat dry each piece of filet. Dredge it in the flour. Shake off the excess and then put it into the egg wash. Remove it from the egg wash and place it into the breadcrumbs, using a fork to make sure that you cover the piece of fish with the breadcrumbs on both sides, right? Now take that breaded piece of fish and just put it on a plate and repeat until you have breaded all the fish, right? So you want to repeat that one process. Now turn the oven to broil. And pour some olive oil in a broiling pan, and you want enough that you're covering the bottom with a little bit extra, right? You want to because you want the fish to be in the oil, right? You want to heat the oil under the broiler. Now be careful to watch, because the oil gets hot, it'll flash, it'll flame if you're not watching it, right? You can make sure it's ready. Take a pinch of the breadcrumbs, toss it into the pan. If they sizzle right away, then you know it's ready. When it's ready, place the fillets in the hot oil. Put it on one side, then take a fork and flip it to the other side. Now let them broil to a nice golden brown. Open the oven door and with the spatula, carefully flip the fillets to the other side so that you brown the other side. Once you're browned on both sides, remove and place on a serving platter. Serve this with tartar sauce, and remember, any leftovers make a great fillet of fish the next day. Make sure, though, you use toasted Italian bread with some melted provolone cheese. Oh, my God, and a bit of tartar sauce. It is really delicious. Okay, so for the homemade Italian-style breadcrumbs, which you can use for a range of things, and you need a food processor. Blend a bag of hamburger rolls or hot dog rolls. Transfer that to a bowl. You want to add pepper, onion powder, garlic powder, parsley for color. And the key ingredient now add 3 or 4 handfuls of grated pecorino romano and Parmigiana cheese, right? Mix them up. Don't add any salt, because the cheese is going to make up for any salt that you think you need. Mix this well, give them a good sniff, make sure they smell delicious, then you're ready to use them. Those are the Italian-style breadcrumbs, and you can use them across a lot of things that you use breadcrumbs for. In any event, Look, I'm going to have now my third cup of Dunkin' Donuts coffee. The day is getting started. The sun is coming out. Futures are up. We can keep our fingers crossed that maybe something good is going to happen today. In any event, take good care, and I'll see you on Monday.